I am Peter Rose, founder of Longwood Currency Trading. I've been having some conversations with folks through emails and whatnot about reasonable expectation for what you can make as a retail trader in the Forex market. The problem that comes up in the conversation is always, we hear that people are making 40, 60, 80% on their trading, but we see some of the greatest traders in the world at 12%, 16%, 20% is outstanding. There are some who have been able to make far more than that. And if you do some research, read Jack Schwager's book, and he'll go over some of the folks that have tremendous returns and are very, very famous. So if the best of the best of the best can only make, let's say, on average there's some folks up there that are making 60% a year compounded over 20-year periods of time. There's others that are at 12%, hedge funds and things that are running 12, 14%. Well, let's just pick a number and say that if you can do 12% a year, that's 1% a month, you're in the best of the best. Well, the problem is that you're comparing yourself differently than the best of the best. The best of the best is dealing with massive capital. You can't just roll that around the same way that you and I, as a retail trader, can do. Now, I trade a six-figure account. I can go in, jump ball at the start of a trade, running a 10 or a 20 lot if I want. It doesn't even phase the price action. When I hit close, I've closed 25 lot positions in just as soon as I hit the button. Can you do that trading a $100 million portfolio of stocks? Can you do that if you had $100 million and you were trading in the Forex market? Well, probably not, because the scale of the money that you're trading then begins to affect the outcome of the price. It's a supply demand. If you're working in the stock market, which is a big market, right, it's still dwarfed in comparison to what we're doing in the Forex market. The Forex market is $6.7 trillion a day, and we're in right now the latter part of December of 2023. That's almost $7 trillion a day. That's more daily volume than the stock exchanges do combined. That's massive. So you have basically international commerce going on in the Forex market. That's what FOREX stands for, right? Foreign exchange currency market, where individuals are placing, in one country, are placing orders through their institutional bank for maybe $2 billion of airplane parts. And somebody else is going to have to buy that currency that they're selling so that they can convert the currency into the currency that they're trying to buy the airplanes from. That isn't going to go away. That's massive volume. So do you really think that if you're trading a $300 or $400 or $500, $800,000 Forex account that you're no more than shit dust? And so what I did, taking my background, and if you don't know what my background is, please check the description in the About page, and go to longwoodcurrencytrading.com on my bio page to see what my qualifications are. In looking at the currency market, when I'm not going to go over my story again, but I flatlined and stepped back from it and said, why did I lose $40,000? And figured all that out. Part of how I went back and reevaluated the conclusions that I had come to was a technique in project planning called a PERT diagram. A PERT diagram is like if you want to move your office from location A to B. You have a happy path, which is everything goes okay. All the workers that need to show up to pack the boxes show up. The boxes are there to pack. Nobody gets hurt going down the stairs carrying the boxes. The truck is there on time. You load it. It drives to the location, and you drop the new material off, and then you set the new office up. That's a happy path on a PERT diagram. The least amount of time, no problems. Now, what if everything goes wrong? So that's a lower path that you would go through, and it takes into consideration, well, the truck that was coming to pick up these boxes that I'm moving had a flat tire, and so it's running late. The driver came down sick, and he couldn't drive the truck, so it's going to be 2 hours late because we got to get a replacement driver. The truck on the way taking the material to the office ran out of gas. The people who were supposed to show up to pack didn't show up. Somebody got injured coming down the stairs, so we had to get the paramedics to come. So all those things is the worst case path. Each event has a time to it. Oh, the truck ran out of gas. How long is it going to take to get more gas? Well, it'll take 40 minutes. And so you put 40 minutes on there. So each box has a time stamp on it. In any event, you end up with 6 or 8, or if you're really complex, 10 or more of these paths. And you take each box that has a time frame on it, and you add up all the time frames, and then you sort those in order of the probability that those events that were in that path could take place. What's each one's standard deviation from the happy path? And then you look and you try to find the one with the most likely probability. If I do this and I do this, I can expect this problem, and it'll take this long, then I can solve that, then I move on, I'll hit this problem. So you're going to hit problems. You're not going to have a happy path, but that's the most likely path. That's what you learn from a PERT diagram. And that's what I did when looking at the various solutions of working with account and account. And there are 2 analyses that I did. One for relatively new traders who were dealing with trading 1 to 3 full lots of currency. And that's the kind of person that I'm looking to, or that would benefit the most from the kind of training that I provide, is someone who's trading for a mid to low 5-figure account and about a year experience, because they understand what's reasonable, what works and what doesn't work. They just don't know how to put it all together. So they're the ones that I can influence the best and are appreciative of what my comments are. You know, if you're just getting started in currency trading, you have all the crazy ideas about stuff, and I get people actually arguing with me, and I you know, good luck to you. But what's reasonable then? You have the guys that are saying, oh, I make 100% a year every year. Well, maybe. What's the likelihood of doing that? Let's take the middle of the whole percentage return game, 50%. What does it take in order to make a 50% per year return? Now, there's some math that I do in my coursework and the consulting, and when I'm talking with people, where we break this stuff down and we go through the different scenarios of what you would need to do in order to make different percentage returns on your account. The 2 different approaches to trading, as I was talking about, was someone who's just getting started and they have that 1 to 3 full lot bank trading capability, and they're working on a set of rules and a set of processes that enables us to really figure out fairly quickly what their reasonable expectation of return is. It's much higher than you would suspect. The next group of people would be, well, when you're getting into trading 8 full lots and up. That's generally where some of the more advanced techniques that are available to us in trading, where I teach the introduction to those techniques at that point when you're trading large multi-lot positions. It's a different when component to the rules that we have. The rules don't change. It's just when you do certain things. And in that aspect, the amount of money that you make as a percentage return is better than the beginner. But the reason that it's better is not because they're doing anything different. It's just that they have more experience to make the judgment calls that are necessary when you're trading large multi-lot positions. That's not necessary when you're an all-in, all-out trader trading 3 lots or 5 full lots or something like that. You go in with 5 full and you pull the plug and you're out with your 5. It's a very simple process if you understand how to break the problem down into the solution factors that are involved. Not only from the standpoint of the life cycle of a currency pair that I talk about all the time, which is the 3 problem domains of the life cycle of a currency position of entry analysis, position management, and exit methodology. Those are 3 problems that you solve. I did that initially when I lost all that money, and I stepped back and said, I'll just apply my 33-year career as a software engineer to this problem, which is the currency market. I identified those 3 problem areas: entry analysis, position management, and exit methodology. I created a rule for each one of those, and I've been trading those rules ever since. I don't change them. There's no need to change them because they're trading rules, not based on Fibonacci's or Bollinger Bands or all the rest of the shit that everybody is trying to tell you that you need to know. A lot of the people that are coming into the currency market are coming in from the stock market, where in the stock market, if you can make 12 or so percent a year against your bank, you're doing really, really well. If you're a high energy trader and you're doing penny stocks so that you put a lot of money against these small moves in the penny stocks, then you make millions. Maybe a dozen people or 20 people make millions. But there are an awful lot of other people that are simply replacing their job income, $40,000 a year or $80,000 a year, and that's significant in their ability to do that. However, for the majority, like I said, you're bumping into competing with the hedge funds in a market that is really not. When you start trading $1 million account, pushing some 3 or 4 stocks in the Dow 30, or you pick some Bob and Jane's grocery chain of 18 stores, and you're trying to throw $300,000 or $400,000 orders against that, or $30,000 orders against that, the level 2 and the volume and stuff. The guys will pick that up and they'll stop hunt you, and they'll fade you on that. That doesn't happen in the currency market. What you're dealing in the currency market is order flow by large institutions pushing billions of dollars, and they don't give a shit where your stops are or whether you're going to come in or not. They're trying to conduct business. God, I get so many people commenting, "Oh, is the FOREX market rigged? I see they seem to hunt my stops." Don't put your fucking stops where it's obvious. Learn how to trade. God Almighty. Is it reasonable to expect that you could make 40 or 50 or 60% return on your money? Yes, I do that. That's what I have. The issue that I am involved in is I'm not trading to pay my light bill or to replace my job income. I'm trading a 6-figure account, and I'm used to making big money and having big money because I was in real estate for 40 years. I'm used to pushing around a couple of $100,000 at a time. The last building that I sold I got a check for $633,000. So I'm used to big money. So trying to make big money is not a big issue for me. I'm willing to push it to the center of the table when I have a good probability that it's going to succeed. This month in December of 2023 with all the chaos in the financial markets and things going wrong, I'm up $19,000 for the month, and that's about 12%, I think, for the month. Yeah, it's about 12% against my risk in a month. So will I end up at 120% for the year? No, because I lost 6 figures at the beginning of the year because I pushed the envelope. But I didn't go broke. I didn't flatline my account. I lost 6 figures in July, and in the next 3.5 months, I made $90,000. Took advantage of another opportunity, I thought it was, and most of that $90,000 didn't work out. And so here I am back, and I'm trading again. Last month, I made 8 or 9%. This month, it looks like I'll be over 10%. Anyway, there's still enough time to screw it up. I still have 4 or 5 trading days in December, so I could screw it up and lose $6,000 or $8,000. So it isn't so much the money that I'm losing, but what's the percentage return that I'm going to end up with at the end of the month? I mean, if you're talking about a 12% return for the year, that's 1% a month. That's ludicrous if you're trading currencies. You shouldn't be trading currencies if you can only make 1% a month. You shouldn't be even trading currencies if you're only making 20% a year. You could make 20% in real estate. I mean, not just waiting for your house to appreciate at 8% a year and you just sit with it for a long time, but you have cash on cash from rental flow and depreciation and all that other crap. You're at 25% if you know what you're doing over 20-year periods of time. And a lot of expertise. Currency trading, you don't need all that expertise. You don't need all that knowledge because you're not competing with the guys that know all the information about GM stock. You can't compete with the news. You can't compete with the economic study that the large institutional traders are doing. So don't try to play their game. Everybody's teaching you how to play the game the wrong way. If you came to me, let's say I was an expert swimmer, and you came to me and you said, I want to join your swimming team, and I said, great, the team is now in a race with this other club, and so you get in there and you swim. Here's a couple of strokes for you. Are you going to be successful? Okay. So the problem isn't making good percentage returns on your money or believing that you can't make over 12% a year. It's the education that you're receiving that doesn't show you how to put things into the proper perspective for the market that you're trading. That's the focus of what I want to get across in the video. Reevaluate what you think is possible. These guys that are teaching this stuff at 200 to 1 leverage, yeah, you can make $10,000 a day. But what happens when you lose? What happens when you've got you're doing that plan, you're playing that plan, and you're maximizing your money, and you're trading at 200 to 1? Well, there's an instance out there. I have great respect for the guy because he really knows how to trade. It's just that he doesn't know how to teach it, and he's an entertainer, and so he's pushing the money around and he's made millions of dollars, so he knows what he's doing. But in trying to use the techniques that he teaches, because that's how he knows to teach, he lost $300,000. Well, everybody pooped on him. Oh, I didn't poop on him. That's just shit happens. You got millions before. You were just pushing the envelope there. So you can lose a lot of money if you do the wrong thing or you do the right thing at the wrong time. But that's all you have to figure out how to beat. If you can beat that, you can make large percentage returns on your money. Why not 50%, 60%? You're not trying to compete with these hedge funds. You're not trying to compete with Ed Skota, one of the greatest traders in the world, or Jesse Livermore. You're not trying to compete with those guys. You're just trying to replace your job income. Or if you're just getting started, you're just trying to figure out how to make $2,000 a year so you can pay your light bill. That'd be a good start. So when I say, I made $5,800 yesterday, and so everybody goes, oh, you're bragging about how much money you make. No. It was a percent return on my money. Yes, it was a 4% return against my bank risk, but okay, let's back up from the thing. If I made $5,800 and trading a 10 lot, which is, my position was a little larger than that, and it wasn't just one trade, it was like 4 different trades. If you were trading a single one lot position, then instead of $5,800, you'd have made $500, $580 or something like that. What do you need to do? You need to make 50 pips. So, can you make 50 pips in a day? No, not every day. But I've chronicled many times on this video channel times where we've had 80 pip 5-minute candles, or 15-minute candles. I've had some 80 pip 5-minute candles too, but there are more of the 15-minute brand that go 80 pips. So could you make 50 pips? Yeah. Could you count on 50 pips? No. Why don't you count on making 10 pips a day? Everybody seems kind of settled on that knows what they're doing. Hey, if you can make 10 pips a day, you're golden. Man, not only 10 pips a day, you're golden at 5 pips a day. You're not going to make job replacement income on 5 pips a day with your $10,000 account. You could take your $10,000 account and trade it 200 to 1 and be trading 20 lots, and maybe you could do it then, but you're going to lose it all. So what's reasonable? What's reasonable is really different than what the expectation of the skill level and the market that you're trading in has. So just bear all that in mind. If you have any questions, send me an email. Be happy to discuss that with you. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.